What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is April 27th of 2020. Well, folks, I hope y'all are having a fantastic day wherever you are. And in today's video, I want to do a really quick and short video today, just talking about some very key points here in regards to preparing for the halving event. I know a lot of people are curious about what's going to happen. I know we did a video recently, which I highly recommend after this you guys go check out for some context in regards to some of the points we talk about. But I want to go ahead and just try to talk about a few things just to expect that we might have not discussed in the previous video. So we've got a lot of things to discuss here right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. Check out the link down below in the description to learn more. Alright, so let's just go ahead and start off by taking a look across the board of the market. There's a few questions we didn't really get to talk about in regards to what I expect for the halving event, or just some things that I thought I would toss out there to give you guys to look at. And I want to start off first, of course, by looking at the market. Now, the market's been really good over the last few days. Over the weekend, Bitcoin continued to tick up about $100 each day, so we're pushing up right now towards around 7,700. We can see Bitcoin is not only doing well, but the vast majority of crypto markets are up at the moment. Now, we're starting to step in a little bit more of a neutral territory here over the last few hours, but yesterday we had a really nice day. The whole weekend was really good for our altcoin positions. Kyber Network rallying back up to relative highs here, getting very, very close to looking like it might retest towards its previous highs compared to Bitcoin. Chainlink still holding up relatively well. We had Raven coin starting to pick up the pace. We had, for example, Basic Attention Token and Ren as well, still holding up quite nicely. So again, a lot of the cryptocurrency positions, even energy and engine coins, some of our other top 10 plays as well, doing pretty good. And we can take a look here at overall market capitalization. This is going to be one of the first few points that I want to talk about here in the sense of a few key pointers that we should keep in mind. We should keep in mind right now that valuations are exactly where they were before we had the dramatic sell-off that we had, one of the worst sell-off days for Bitcoin, the second worst sell-off days for Bitcoin in history, and the worst sell-off day for Ethereum. We have recovered those losses across the board. Now, give or take, Bitcoin has given up some of its dominance at that point. Altcoins have made up a little bit more of that market capitalization during the meantime. But if anything, I think that shows is a pretty good sign. It shows that markets are stepping in, taking a little more risk here. If altcoins are outpacing Bitcoin, it means markets are usually setting up for the next cycle to some degree. So very interesting point here to keep in mind. So I think this is more than anything a positive sign. Now, on the general just kind of perspective of realizing we're at that same valuation range, that we've recovered those losses, and we haven't had a real stark correction yet, are we at the point where we're going to get that correction? And again, as I've emphasized throughout my previous videos, I'm going to keep drilling this point, guys, about how I know it sounds crazy, right? We've gone down from a bottom valuation, if you take the absolute bottom, right, about $120 billion, $123 billion, upwards of $100 billion now. We've gone up $100 billion in valuation since then. Isn't it time for a pullback? Markets have nearly doubled. And I'm going to say, in my opinion, it's not yet. And there's a reason for that as we go through here. And that takes, well, let's just go ahead and take a look at the chart here, and this will summarize it quite nicely. The reason why I don't believe we're going to get a correction at this exact moment is I do believe that we're very well on our way towards 9,000. And as you guys have probably seen, and I'll go ahead and just bring it up on the chart here because it's on a separate one. Go ahead and bring up the Bitstamp chart. Right, we've talked about this. Go ahead and take a look here on the weekly. Right, get the log chart going. We can see here that we've been building into a very long-term wedge here, and we've got the halving event coming up right here. Okay, now it's going to be somewhere here in the middle between the 11th to the 18th. Again, it will vary a little bit. That timing on the actual block, I mean, people will be keeping an eye on it. Once we start getting really close, we'll start to have more confidence on what's going to happen. But because of the 2-week adjustment in block difficulty, in this case for mining difficulty, it's going to take a little while to really get that official time and date. But we will be live streaming when we do it, when it happens, right? I want to be here with you guys when it happens. It'll be a pretty exciting moment. We can see here that every single week since that terrible sell-off, we've actually been having consecutive green weeks. I would say, to follow the trend here, that it's likely that as we go into the halving event, sure, we are going to see an increase in volatility. It's an important point to keep in mind. we are going to definitely see a lot of jitter within price, but I think we're going to continue this trend up here. And it's going to pick up momentum as we go into the halving event to where we're going to probably be up into around the $9,000 range, if not the upper $8,000 range. So we still got a little bit of room here over the next 2 or 3 weeks. It's going to be very interesting times. And then after that, I do believe we're going to have a pullback back to about where we are right now, between $7,000, the upper $7,000 range to the lower $7,000 range. I think is where we're going to come to pull back, set a higher low, and eventually continue to retest this line of resistance and signal the price wants higher levels. That's the key thing we're going to be looking for. Of course, this is over the course of a couple of months, so I want to, again, focus on the short term here. Now, one thing that's important to keep in mind outside of valuations increasing, markets getting back up, especially Bitcoin in this case, getting close back up to where it was beforehand, and continuing a multi-week green trend here, there's something very important to talk about, and that's the fundamentals of the stock-to-flow model, and that is the newly issued Bitcoin per block. Of course, as we all know, the halving event, where there's going to be a lack of issuance in new Bitcoin comparative to the previous blocks before this new halving event. So I want to go ahead and just kind of preface this around a discussion from Matty Greenspan that Cointelegraph covered about how Bitcoin's annual inflation rate is going to be almost 50% of the world average after the halving event. Okay, so this is really, really interesting here, guys. So this is a tweet that Matty Greenspan put in, and in just 15 days, about 15 days on average, the annual inflation of Bitcoin will go to 3.65% to just 1.8%, approximately half of the global annual inflation rate. Okay, so he basically points out here, you can see here over the years, we can see not only the average inflation rate, but also the expected inflation rate for worldwide currencies. And I would have no doubt that a lot of these values going forward are probably pre-COVID-19. These have not probably been changed going into an environment of COVID-19 and a potential recession. This is with the hope that we were going to avoid a recession and never have a recession again. And I like Matty's post on this because it really shows the dichotomy here. If we're going to 1.8% inflation, we are well beyond the inflation rate of most worldwide currencies. And not to mention, this really sets us up for the next halving event sometime in 2024, where we're going to have a lower inflation rate or a better stock to flow ratio than gold, making Bitcoin an even better store of value and continuously progressing it towards the next halving event, and the next halving event where it's going to be the ultimate store of value on the world stage, in my opinion, especially in a digital age. Now, there's one point I want to bring up here in regards to Matty's tweet, and it was a point that when I first read it, I actually disagreed with, but as I took a look back over it, I realized he was talking about a point that I've been trying to drill for a very long period of time, and that was the bottom half of his tweet here, where it says, at this point, adoption doesn't even need to grow to sustain the price anymore. Satoshi either knew what he was doing or got extremely lucky. Now, on the point of Satoshi knowing exactly what he was doing, being a whiz, and thinking years into the future, just getting lucky, I would probably say the latter is probably true. It's not that he didn't intend to have something that was semi-deflationary or to have something where the inflation rate was declining over time to a fixed cap supply. I'm not saying that that's not what Satoshi had intended, but what I do want to talk about is this point at the top here. Adoption doesn't even need to grow in order to sustain the price anymore. Now, when I first read that, I thought Matty was just saying in this case that people don't have to, in any capacity, use Bitcoin, whether that's for a store of value or for some form of currency or payments. And I would disagree with that, but that's not what Matty's saying here, at least from what I can gather. What I think Matty's saying is that the halving model in this case, the inflation rate dropping so starkly, is going to fundamentally drive Bitcoin's price higher. As we've talked about, it's going to lead towards a massive supply shock comparative to the current demand for Bitcoin. And as we've talked about, that leads to a reflection, a big gap in supply and demand over the next few months, whereas prices start to reach higher levels. And in this case, you start to get more demand. We've seen this in the two previous halving cycles where as price increases, demand generally increases for Bitcoin. Adoption increases for Bitcoin. And this is a key point that I've tried to drive home a lot with the halving event. I know a lot of people out there in regards to crypto have looked for adoption. I know many of us try to use crypto where we can in the form of payments. We hold on the cryptocurrencies and we see it as a hedge or as a store of value. But the key thing I want to drive here to everyone, at least from what I've been able to pick up, looking at the last two halving event cycles, though we still have a very small percentage of the world who's actually owned some form of crypto, We've seen massive growth on a logarithmic scale from the previous halving event to the second halving event, and I think we're going to see it for the third halving event. Price brings in new people because that's Bitcoin's biggest function. It's a store of value at the end of the day. It's something where it sets continuous lower highs and, higher lows and higher highs. And that's what you want to see for a store of value, especially for something that's already done that for the last 10 years consecutively. That's a very important value add. And I know it sounds kind of gross at the end of the day for price to be the lure in for a lot of people, but quite frankly, it's just reflecting the halving model. It's reflecting that Bitcoin is a non-correlated asymmetric asset that's completely separate from what the Fed decides to do tomorrow, and is completely separate from what China, or the ECB, or the Bank of Japan, what they decide to do with their monetary policy. The only way it's reflected is that its dollar value is going to probably change when those policies change. And we've seen over the last couple of weeks, ever since the Fed has been initiating massive monetary policy, we've easily recovered back to where we were before the worst sell-off day in history. And we're coming into a very interesting time. We've got what's going on in the macro perspective with central banks, the biggest QE injections in history, negative interest rates that are going to become a reality for many countries, most likely, including the United States here sometime in late 2020 or early 2021. I bet on it, guys. I put my money on it. Keep an eye for what's going on here with central bank monetary policy and the broader macro perspective. When we start to reopen the economy, I can tell you all, even though we are going to see a short-term bump in GDP, I really don't believe it's going to be as stark as many people are calling for it to be. Longer-term unemployment, excessive Fed monetary policy, these things are going to start to reflect in a lot of hedging assets like Bitcoin, gold, and silver. We'll see what happens over the next coming months. And I think the halving event is the perfect shift here. That it still is yet to be priced in because we may be able to price it in, but we can only buy so much Bitcoin. The rest of the world here, they don't understand Bitcoin, and they sure as hell don't understand the Bitcoin halving model. But many of them will eventually. And that's why it can't be effectively priced in, because the difference in supply and demand is what determines Bitcoin's price on a daily basis. And until we get that demand continuing to stay at the levels that it is right now, the buy side pressure that's consecutively coming every single day as miners have been selling off Bitcoin, and until we get that supply shock, then we can't see it reflected in price. Again, to emphasize this point and many more that I've talked about, please watch my recent video on the halving. It's one of the most recent videos. You guys can go check it out on the videos section of my channel. You'll see it there, kind of a playbook for the halving event in 2020. In summary, expect more volatility. Expect people to get excited about the fundamental shifts here and the market dynamics here between supply and demand for Bitcoin. And if the trend's been strong over the last few weeks, I'm not fighting it. Not until we see a shift. Anyways, have a great day, everyone. Thank you all so much for watching, and I'll see you all in the next video. Stay tuned.